Today's article is titled William Ackman, Everything You Need to Know About Finance, and Investing in Under an Hour by Big Think. In this article, Ackman uses the example of starting a lemonade stand to explain the basics of finance and investing.
He begins by discussing how to raise money for a business. He explains that you can form a corporation and sell shares of stock to outside investors. For example, selling 500 shares of stock for $1 each can raise $500 for the lemonade stand business. The investor would then own 1/3 of the business while the original owner owns 2/3.
Ackman then goes on to explain how to calculate the value of a business using a balance sheet. This involves breaking down the assets, liabilities, and shareholder equity. He also introduces the concept of borrowing money instead of selling more stock in order to keep a larger percentage of the profits if the business is successful.
Ackman discusses the income statement, which shows the profitability of the business. He uses the example of a lemonade stand business selling 800 cups of lemonade for $1 each. After deducting expenses, such as inventory and labor costs, the business has a pre-tax profit of $10. However, after paying interest on borrowed money, the business actually has a loss of $15.
It's important to consider risk when investing. Ackman explains that debt is generally safer than equity because debt holders have a senior claim on the company's assets. However, equity holders have the potential for higher returns because they take on more risk. If the business fails, debt holders will be paid first, while equity holders may lose their entire investment.
Ackman explains the difference between debt and equity when it comes to raising capital. Debt is a loan that must be repaid with interest, while equity involves selling shares of stock in the company. He also discusses the option of going public, which means selling stock to the general public through an initial public offering, IPO.
Ackman concludes by emphasizing the importance of starting early when it comes to investing. He explains how compounding can significantly increase wealth over time. He also emphasizes the importance of earning a good return and avoiding losses in order to have a successful retirement.
That's a summary of the main points from the article. Stay tuned for more in-depth discussions on finance and investing in future episodes.